Welcome, everyone. Thank you for joining us today. I'm Kathy Jiamboi, founder and president of Creative Edge Marketing. And joining me today is Jeff Cormell from Bank of America, where he is vice president of healthcare lending with Bank of America Practice Solutions. Jeff's been there since 1999, so he's got a lot of experience there. And his experience lies in practice growth strategies, practice acquisition, cash flow management, a host of other things. So welcome, Jeff. I'm so glad that you're here. And, please fill in where I may have left short on you.
Sure. No, thank you very much. I appreciate you having us be part of this. But no, we're, as Kathy was saying, part of Bank of America Practice Solutions. We're the healthcare lending group for Bank of America. So we specialize in healthcare. Along with what Kathy had mentioned from the business planning, cash flow management, we also assist with any type of loan that a doctor may need, from starting a practice to buying or expanding and helping them grow. So we feel like we've got some good experience and good solutions to help the client expand their business and continue to grow it. So we're excited to be part of it. Thank you.
Yeah, thanks for being here, Jeff. I'm really grateful because I think, you bring a lot of value and can help dentists, and we can talk about all those things. One of the things I do want to talk about on your bio that I saw that I didn't mention was your ownership in a dental management company. Tell me a little bit about that.
Yeah, so several years back, I was approached by a friend who is a practice owner and wanted to potentially grow his business, grow outside of his existing dental practice. And we had started up a management company together and bought and sold a few practices here in the Central Ohio area over a period of about 8 years. It was a unique experience for me because I had probably 12 or so years of dental lending experience, and it allowed me to use that experience along with some of the executive management experience I had at the bank and kind of integrate it into managing with the dental practice. So as I mentioned, we bought and sold some practices throughout that time. It really allowed me to kind of step behind the curtain a little bit from the operation side of a practice and understand the challenges that they go through, the opportunities that lie in those practices. And it was very unique. We were able to take some practices. We focused on kind of underperforming practices and help them grow. And so we were able to kind of take those practices, provide best practices, provide some systems and processes in those practices and help expand them. And then eventually we got to the point where we ended up selling them, did pretty well with those and continued on. And now in my current role where I'm out helping doctors face-to-face, which I did early on in my career, kind of full circle, I can now have conversations with them from two different lenses. One from a lending perspective, and then two from having past ownership experience and kind of sitting in a similar seat, minus the clinical part of it, but able to kind of talk through different scenarios because I've been in those same challenging situations before. So it was very, really cool. Very unique and very helpful as providing in this role. So
yeah, absolutely. I can see where that would be so beneficial. Because you can tell them exactly how it is, right?
Yeah. And things to look out for. It's challenges that I've had, especially for young doctors that are starting up or buying their first practice. It's beyond valuable to them, I think, just to kind of give them some things to look forward to as they head into the journey. And then from an established doctor standpoint, I think so many times they're in their clinical mindset, making sure that the patient's taken care of clinically, managing the staff, and from the business side of it, if that again is systems and processes, if it's cash flow management, growth strategies from how to use technology or marketing or communication out to the patient base, the community on how to grow the practice. I think a lot of times those things are sometimes not forgotten, but not on the priority list. And I think that's where also I've found that helping them build the appropriate team around them, from the team of professionals that can help them with all of the areas of business that maybe aren't on the forefront of their mind, I think has been very valuable as well.
Yeah, there's a lot that they have to do on a
Yeah.
daily basis. It's
You wear a lot of hats, and I think that's one thing that most probably don't anticipate until they have ownership. You
Mhm.
know, from an HR standpoint, from a marketing standpoint, from a patient care, from CFO to CEO. I mean, they're wearing all of those hats. Um, and it's challenging. There's
Right.
only so many hours in a day that they can focus on clinical and have the bandwidth left over to be able to think about and do those other things. And that's why it's so important to have that team around you that can help.
Yeah, I agree. Couldn't agree more. So tell me a little bit about what's going on, the current state of banking.
Yeah, it's a great question. It's very unique. Obviously, coming into the early part of this year, I think banking, from a lending perspective, was as good as it's been in many many years. A lot of activity. Doctors are opening new practices, buying practices. There were a lot of practices that were for sale to be purchased. There were many doctors looking at expanding their businesses either through a footprint expansion, relocation into a new location, um, buying a new building, leasing a new building. I mean, buying technology. It was all happening first part of the year. We had really good momentum, and then obviously beginning of March, I think we were hit with a complete shutdown, obviously,
Right.
and something that was unforeseen, something that I'm not certain that anybody was prepared for, either personally or professionally. And it just really took the wind out of a lot of the sail that we had going in the momentum. And so, currently, well, let me step back. What happened during that time from a banking perspective was that I think the banks paused. As shutdown mandate. I cover 3 different states, and they all had different start dates. Again, doctors are trying to figure out when they're going to be able to open, how to communicate with their patients, those types of things. And during that time, banking just paused. And from a Bank of America standpoint, and I think most did as well, most other banks did as well, is they really focused on their current clients and what do they need during this time frame to make sure that they come out of this on the backside. And so during that time, many banks focused on solely that. And then as states started to open and practices started to open, then banks started to open back up the underwriting portfolio and allowing doctors to access capital from them. Clearly during that time, the government stepped in with assistance from a personal standpoint to business. So that was happening. Banks, obviously, if they provided the PPP loans, were heavily engaged in that. I think for probably 2 or 3 months, most banks that did PPP, that's probably all that they did during that time frame. And then as those passed, those loans were funded. Again, now getting back to the business. The current state is some banks are open, some banks are back to, I would say, close to normal with respect to lending how they were. I would assume that most still have a little bit of a tightened underwriting window. Some banks have come back partially. They may have omitted a few products here and there, wanting to wait and see. And some banks are still kind of very tentatively stepping back in. So it's a wide breadth based upon the bank and how they're looking at, the current situation. I think many of them are probably talking to clients about modifying their existing loans to see if they can help them with maybe extending the term or adjusting the rate. Some are providing additional lines of credit, and many are doing consolidations. And that's one thing that we're focused heavy on. Clients that may have had unfavorable terms with other lenders, looking at the opportunity to come in and improve the cash flow position with them. So it's a myriad of different angles that they're coming from, but I think most are coming back to help.
Cool. So let me ask you this, because I don't really understand banking, so I'm glad that
Yeah.
you're here for this. But we've got the
Sure.
SBA loans, we've got
Mm-hmm.
conventional loans. So can you talk a little
Yep.
bit about what that is and what the difference is?
Sure. I think, obviously over the last 90 days, there's been a big awareness of the SBA and how they have stepped in to help the doctors through the PPP program and the EIDL program that they had. But I don't know that a lot of people understood exactly what the SBA was or is. And that's a program, it's a government-backed program. It stands for Small Business Administration. And what they do is their primary role is to support banks to grow the small business sector. And so what the options for a bank are conventional lending, which in that standpoint, that is going to be underwritten from the local bank or regional bank or national bank, like i.e. us or Chase or Wells Fargo, or any of the other large players that are out there or regional players. They're going to write a conventional loan, and that loan stays on their books. That's the risk of that loan stays on there. And that is the high level conventional program. The SBA, and we can talk about the details of both, but the SBA program is a sponsored program by the government that allows the bank to step into loans that they may not normally do with a conventional product, because the government's going to back 75% of that loan. So if they're putting a loan on the books, they have a security blanket there provided by the SBA that the risk of that loan for that bank is marginalized down, versus the conventional where they would have all of the risk from the banking standpoint. And with each loan, there's different pros and cons of each. We won't get into those, but the SBA loans have fees involved, varying fees involved depending on the size of loan. But the benefits are typically they can give you longer terms, assist with cash flow, may do bigger transactions than you would normally have on conventional, different types of transactions than you'd have on conventional. So it's a very good product for a very specific scenario. But there's pieces and parts to that. The details of the loan you need to talk with your banker about to figure out if that makes sense, versus the conventional side, if offered by the bank, typically has shorter terms than the SBA, but less fees, and typically the rates are, more favorable. So there's no right or wrong reason or right or wrong answer to go with one or the other. It really is a case by case, but one is guaranteed by the government, which allows the banks to want to step into those, and the others are offered by the banks, which they're going to do a different type of underwriting on those. But both are very good.
Thanks.
Yeah.
It helps me a lot. So let me shift over to the PPP and what you're seeing now, what's happening with that. I know not to talk about what it is, because I'm sure everybody knows what it is at this point, but with the forgiveness, what's going on?
Yeah, great question. With the PPP program, it's the government was starting, they had set it up where I think it was early August, they were opening that window for banks to be able to start working on forgiveness of the PPP loans. And I think part of that program, everybody that was part of it got the details of what they could get forgiven, how much would go towards payroll, how much would go towards non-payroll items. And they were to work on keeping that detail while they use those PP funds, were keeping that detail with the intent that they would have to supply it back to the bank to get it reviewed, to get it forgiven from the bank, and then ultimately through the SBA. And what's happening now, which is causing kind of the wait and see, is that there's a belief that Congress is going to pass some type of modification to that we're hearing anything under 150,000 may be automatically forgiven. As you can imagine, just with this program, even in the early infancy stages, there's a lot of moving parts. It may not happen. It could be in a reduced amount. It could be an increased amount. But that 150,000, if you take a look at what that means to the total amount of PPP loans that were out there, it's somewhere in the mid to high 80% range of the total PPP loans that were out there. So if they were able to work out a strategy through Congress that forgives that as a blanket without having to provide detail to the banks and having to require the banks to underwrite it, it could be immense time savings for not only the business owner, but also the bank. So I think that's being pushed to see. Most of the banks haven't opened up their portals to allow clients to start sending in the forgiveness information, because I think they're waiting to see if Congress comes back and says, hey, listen, here's the new rules to the game. So I think it's kind of a wait and see. What I would recommend most of the business owners to do, if you still have questions about it, you could certainly talk to the lender that provided the loan, but the SBA on their website has a lot of great information. They have several FAQ sections where people can go find out information. And then ultimately, you need to talk to your accountant about, what they're hearing and what their advice is on that process.
Yeah, that would be great if you didn't have to go through all that documentation, because it's a lot.
Yeah, absolutely. And it's a lot for the banks too. I mean, when they're trying to get back to underwriting and servicing their current clients and new clients, if they're having to spend time to go back through those loans and underwriting them, it's, and when I say underwriting, really reviewing the details of that, it's very much like underwriting in some cases. It's very time consuming and labor intensive. So if we can get that removed, it'll be a huge benefit for both sides.
Right. It's probably would be more time consuming on this end than it was in the beginning, right? To approve
yeah, absolutely. Because there's some risk involved in it. From the SBA side of it, if the doctors, or in our case, doctors, or any small business owner, if they don't get the loan, if they don't get all of it forgiven, then it it turns into a loan at that point. And then the bank, depending on if they follow the guidelines of that, is either guaranteed by the government or not. And so there's potentially loans out there that could be on the books that are not guaranteed. And so there's a lot of different pieces and parts to that could impact the bank. So they're definitely going to spend time and going through it, making sure if they have to do the forgiveness review, they're going to make sure that it's done properly and in detail, so it is guaranteed by the government. Right. If it actually turns into a term loan.
Yeah. So there, on the other side of that, I think the bank did a lot, or banks, I should say in general, did a lot with offering deferrals and such. So can you talk a little bit about what's happening with that? Or?
Sure. Yeah. During that time frame, I think many consumers, not only personal but business consumers, found, and they were found by their banks to have opportunities to provide some payment forgiveness, and not only car loans, credit cards, in some cases mortgages, but also business loans were giving some type of payment relief. I think some utility companies did the same. So I think the economy kind of came together at this point and said, listen, this is unprecedented time. What can we do to help? And I think that payment deferral allowed, along with the government's programs, allowed our economy to kind of maintain some level of stability during that point. And there was some varying types from the business side of it. Some banks completely came in and stopped the principal and interest of the payment for the small business. And what some of the banks did is set those principal payments to the end of the loan, and they would have one extra payment at the end for the sum of those payments that were deferred. Some banks charged interest only during that time frame, so you still had to make a payment, but it was only the interest part of the loan. And again, that principal was either set to the end, or they set it till when the month that the payments came back online, that principal was due then. And some of the other places didn't push those payments to the end. They pushed it till the fourth month, and all three of those payments were due on the fourth month. So it really varied by institution on how it worked, but a lot of them that we talked to provided the 90-day deferral in some form or fashion and allowed that consumer a little bit of relief during that time frame. So it was a great thing to be part of. During that time, I'll tell you, we had a lot of conversations with clients, and especially very early on, and when the practice was shut down, not knowing how long it was going to be, how they were going to provide relief for their staff. So it was pretty rewarding to be part of that solution, because you could tell through the conversations how impactful it was to some of those clients. So
right, I agree. I mean, we did the same sort of thing with a lot of clients too, where put pause on a lot of their marketing and help them get through that time. And you definitely could sense it was scary. It's scary because they have no idea. It's like, how am I going to survive? how do I pay
Yep.
for my life, right?
Yeah.
So
Yeah.
yeah,
And the thing you don't, from ourselves sitting back sometimes, I mean, as a business owner, and you might have 5, 10, 15, 20 or more employees, you're not only watching out for yourself and your business, but you have other families to watch out for, and
yeah,
any of that relief can help them through that. So, early on, nobody knew what the unemployment program was going to be like. I mean, obviously, the government stepped up and adjustments to those programs, and again, I really think it helped as a whole, get through this process. So it was a nice program. So
yeah. So, sometimes it helped. I think in that with the unemployment, it kind of hurt a lot of
yeah,
practices
there were
too.
definitely, some of those benefits were really good for certain people in the business. And yeah, I mean, there certainly were challenges of employees that decided that
Yeah,
they may want to stay on that versus come back. And that was their personal decision based upon what was going on. And but yeah, I mean, it certainly made it interesting during that time
right.
frame from an employee standpoint.
Yeah. So now, what would you say? What are you guys doing now to help? What's
Yep.
happening? That are
Yeah. Sure. Great question. Right now, banks again are starting to get back into the lending side of it. The thing that I've talked to a lot of my business partners about and a lot of our clients about is, what did you learn during this? And I think the big thing that we kind of witnessed from a side is that, and I would guess in your case you did as well, is that the people that had a very sound business practice, had very sound business practices, very sound financial practices, made it through this pretty well. Um, those are the people that had systems in place with respect to how they operate the business, how they manage communication with their staff, their patients, how they operate from a liquidity standpoint. Did they have did they have personal reserves? Did they have business reserves? Um, was their practice run soundly where they had a good amount of profitability built into that business model? And those people that came through that with a sound structure did pretty well. And I think we found those folks that didn't were having a difficult time, and those that kind of lived in a very tight profit margin for the practice, those that lived kind of very tight from a personal standpoint, and maybe kind of didn't have the systems and processes in place to communicate with their staff, that created a bond with their staff, that created a bond with their patients through communication and knowledge on not only what's going on when the practice is running properly, but also what they're doing when the practice was shut down. What are they doing for the new PPE procedures? How are they keeping their staff and patients safe during that time frame? And my personal dentist, we get videos from her every few weeks on what they're doing in the practice, an office tour of how things are set up, what to expect. Yeah, what to expect when you come in, and just letting them know during the shutdown that you're thinking of them, you're preparing for when they come back. Those types of things, I think, were really good. And currently, what we're seeing and doing quite a bit now is taking those doctors that said, listen, I may have had some thought that everything was going to be fine prior to the pandemic. They were taking on debt within the practice and buying technology and buying new operatories and expanding, and not really thinking so much about cash flow pre-pandemic, or the amount of liquidity that was appropriate to keep in their personal situation or the business situation. And I think we're just kind of going, and I think it's easy to do when the economy is humming along and practices are growing, to not step back and think about what if. And I think that what if hit them. And so what we're doing now is talking to a lot of clients, sitting down with them, doing cash flow analysis with them, looking for opportunities within their practice to make it more efficient financially. If that's recommending that they go out and look at their fee schedules, if that's looking at making a recommendation to go out and looking at their insurance reimbursement levels, is there room there? And then ultimately, from a banking standpoint, taking a look at their current debt loads. Do you have the opportunity to improve the rate, even maintaining potentially a similar repayment structure? Do you have the opportunity to extend that repayment structure and still improve the rate to improve cash flow? And all of that has a watered down, trickle down effect to the practice, because if we can open up cash flow, we can open up opportunities to not only put some money in your own pocket, in the practice's pocket, but also have some available reserves for the rainy day. We have a resurgence again of this, or if something happens within the practice, you need to have a little bit of a buffer there, or it provides you with an opportunity for available cash flow to continue to market your business, to use new strategies on marketing, to take that available cash flow and invest it in technology that will help you improve your efficiency or improve the growth of your practice. So I think now is a great time to kind of take a step back and take a look at your business situation and see where the efficiencies are. And I think that's what we're really focusing on right now over the next few months with all of our partners. Also in there, I forgot to mention, does it make sense to talk to a specialist right now about lease negotiations? You might be in a current lease where you're 2, 3, 4 years out from that happening and thinking, I don't need to talk to anybody about that. Actually, the time to do that is 2, 3 years out before that lease comes due. So you could start to look at what is the opportunity for me to maximize my position where I'm at. And so there's people that can help with that. And that's really our job, is to kind of connect with those professionals that can help those business owners run that business as efficiently as possible. We're a banking piece of that, but we're also part of that team that can really help that doctor build that foundation to make sure that they have a strong business.
Yeah, see, that's really great, because they really need that. They need, it's kind of like anytime you've ever read, you don't know what you don't know, right? And
Yeah.
so when you can kind of bring another piece to it, that's so helpful.
Yeah.
So can you give me some examples of when you're talking about the cash flow and just reevaluating their financial situation where you've done that?
Yep. Yeah, absolutely. So a couple of different scenarios will come up. Is we'll have doctors talk to us that said, hey, listen, I bought a practice a few years ago, and I'd like to see if I can refinance the rate. Certainly can do that. We can certainly work on getting a better rate, improving some cash flow. They may want to do that with, the startup loan that they did, an acquisition loan, a building loan. But I think what we've seen, again, over the last few years, that a lot of doctors have gone out and spent a lot of money on technology, and money to get technology and new equipment in the practice is pretty easy. A lot of the distributors have their own in-house programs to do that. They have quick approvals, quick turn times. The doctor can get that equipment in their practice very quickly and efficiently. One of the things, though, that we ran into is that those loans, that when they're looking at technology, have some type of promotion involved in them typically to get the buying to happen. But they also have very short terms, 3 to 5 year terms in those cases. And after those promotional rates are gone, typically interest rate is pretty high. What we've been talking about and doing with some of our partners is going out and seeing if we can't wrap some of those together and, again, streamline the doctor's cash flow. And probably one of the best examples that I have is a few months back, the doctor came in and had 4 or 5 of those short-term equipment loans out there and totaled around, I think, $250,000. Practice could handle the payments fine, but when we took a look at that, we could refinance that doctor on a similar term that they had at a better rate. And in that particular case, we saved the doctor almost $6,000 in cash flow. Now, the reason they came and talked to us was not about a cash flow initially improvement. It was about buying more technology. And so we were able to take that doctor, consolidate what they had. They could still add in the new technology, and they never felt it. So that doctor went from, had they not bought the technology, $6,000 in savings.
Wow.
They added the technology. The savings went down because they were adding debt, but they still were realizing about $3,500 a month in cash flow savings on top of buying that new technology. So,
Yeah, that's great.
those stories are out there all over the place. I could tell you tons of them that are very similar, but it's a matter of doctors just sitting down, taking the time to look at their global debt that they have from the business, from the practice, and understanding, hey, why don't I talk to somebody about taking a look at molding this all together and see what I can get out of it. And it doesn't always mean extending the term and adding more years to the debt. Many times you can get in a scenario where you have similar term and still get a better rate and still save some money. So I would highly recommend doing that. And same thing on your mortgage or anything else that you have personally, take the time to look at that stuff because it can make a difference, especially now with the rates the way they are.
Well, what's so funny is like when I just think about what you just said, like look at your own personal situation.
Yeah.
There's so many, math is so interesting when you start playing around with numbers and doing different things like youing saying. And taking the time to do that can make a huge difference because if you can shave something off here, you can put it over here, it changes your life sometimes.
Yeah, absolutely. And the one thing I would recommend as well is have a few, if you're going to do that, get a few options. Many doctors are hey, I'm with my local bank. I'm just going to talk to them about seeing what they can do. And that's fine. But I would also talk to a few other people to see, listen, what if I were to refinance, do I have a prepayment penalty to leave you? If I don't, okay, I have an easier way to walk out to look at some other places. If I do have a prepayment and I can still get a better deal, it may even make sense to pay the prepayment and go over there. So there's so many different scenarios. Does this bank have fees that are going to, though their rate might be low, do the fees offset some of that? That happens a lot in home mortgages, that the closing costs that are required by the bank make it not as attractive versus maybe another bank. So it's just, you have to look at all the details. Are they requiring insurances on the new loan that I didn't have with my current loan? And that's a extra cost that I have to give up. So there's a lot of different ways to take a look at that, but there's also some details in there. But
yeah, you are so knowledgeable. I mean, I think anybody should take advantage of what it doesn't, there's no commitment, right? I mean, you can go through and say, hey, here's how I would do it.
No,
and
I would tell you this.
Go ahead.
That's a great point. And there shouldn't be any commitment. If you're talking to somebody and they say, hey, listen, we have a fee to do this review, or we have a fee to do an application. There's so many good dental lending companies out there that provide this type of preview or understanding ahead of time prior to you getting some type of commitment with them. You shouldn't be paying fees on stuff like that. Now, it doesn't mean that the loan won't have some type of fee, but getting that analysis done, yeah, absolutely. And that's something that, you and I've talked about, certainly offering it up to your clients if they want to spend 10 or 15 minutes on the phone to go over their current situation. I'm more than happy to do that. Just to kind of give a high level of what might be out there as an opportunity.
Yeah, that's great. I appreciate that. So I appreciate you being here.